Hello, everybody, and welcome to this month's EIU Global Outlook video. My name is Tom Rafferty. I'm the head of global forecasting at the EIU. And today we're going to be talking about capital flows, both to China and from China. It's a hot topic. There's a lot of change driven by geopolitics at the moment in this space. And I'm delighted to welcome one of our China analysts, Chim Lee, who's based in Beijing, to discuss this subject with us and shed some light on a recent white paper that we published, looking at China's outward investment in particular. So, Chim, before we get to the outward side, let's start with inward. We're seeing a lot of change in terms of foreign investor appetite towards China at the moment. It's been slow to materialize in the data, but now we're seeing evidence of that as well. So, what's the latest situation at the moment, and what sort of are the major trends shaping foreign investment into China at the moment?
Thank you, Tom. Indeed, things have been quite tricky for China recently. Since 2022, China has struggled to attract foreign direct investment, and it is worth remembering how things started to go downhill. Let's take a look at this graph. This shows the quarterly FDI flow since the late 1990s, when China began compiling the balance of payment data. The upper part shows inward investment, and the lower part shows outward investment. The line here shows net flow. Now, where there were ups and downs in China's inward FDI flow, many of these can be attributed to China's and the world's economic cycles, and this is particularly evident in the 2000s and the mid-2010s. But all in all, China has always been one of the most attractive international investment destinations. But since mid-2022, we can see very clearly that things sort of fell off a cliff. In the second quarter of 2023, in fact, which is the latest quarterly data available, inbound FDI has been the lowest on record. Now, there are a number of factors at play here, and we'll highlight three for now: the pandemic, China's internal economic factors, and external geopolitical factors. The first is the pandemic. Now, I know it's already largely behind us, but the legacy effect is still with us. China moved away from lockdowns and other strict control measures much later than the other major economies, and investment will take a while to recover. We know that investment needs to do due diligence and also necessary checks before they commit, which can often take months, if not years. The second area of concern is China's underwhelming economic recovery after the pandemic. We estimate that China's economy will only grow by 5.2% this year, and our forecast for 2024 currently stands at 4.8%. Now, consumption has been rather strong this year, but weak demand for manufactured goods, both within China and outside, point to rather weak FDI interest for the time being. The final factor I would like to highlight is the trend outside of China. One of the major driving factors of FDI flows in recent years has been a reorganization of global supply chains. I think the combination of the following two graphs will be able to tell the story quite well. The chart on the left shows the sectoral breakdown of China's inward FDI flows, and manufacturing continues to make up a rather sizable portion of investment. But over the last decade, we see that FDI growth has been driven by the inflow into professional and financial services. And it's also worth noting that China's labor cost has been rising long before all the geopolitical events we see in the last decade, including the trade war between the US and China. The right chart shows global FDI flows by geography. Now, while China continues to be a major destination on FDI, other emerging markets are increasingly attractive when it comes to supply chain diversification. Within Asia, we see that Southeast Asian countries like Indonesia and Vietnam have been the main beneficiaries. India and Latin American countries like Mexico and Brazil also stand out.
And Chim, obviously, just shifting it now to think about China's outward investment trends. I mean, Chinese companies are themselves contributing to this trend of global capital diversification, this look and search for new emerging markets, both as production sites and also sources of demand. So what is the latest perspective on China's overseas investment? We've had several years of quite low flows, but some evidence recently that interest among Chinese companies to go global again is increasing. Is that right?
Yeah, certainly. There's a rather interesting aspect that is happening in the Chinese flow of FDI. If we return to the chart before, we would see that China's outbound investment have been on the rise over the last few decades. There was a period of lull, mostly in the mid-2010s, since mid-2010s, and that is in part because of China's own capital controls measures and also the pandemic itself. But overall, we will see China regaining its position as the second largest source of ODI by 2024. And the flow of outward direct investment is set to grow further in the coming decade. This is not really a particularly surprising development. As a country's income rises and the domestic market matures, its companies tend to go abroad and look for new opportunities. For this, we actually released a white paper to take a look at China's overseas investment trend. And we developed, in fact, this China Global Investment Index back in 2013. It's also the same year China announced the Belt and Road Initiative. It was designed to score and rank economies based on their overall appeal to Chinese companies. And this includes opportunities, but also the potential risks tied to bilateral relations and the business environment.
And Chim, from the work on the index, are there particular markets or sectors that stand out as particularly attractive to Chinese investors? And what are some of the differences between the motivations and risk factors for Chinese investors versus those of companies from other countries, for example?
Yeah, what we see this year is that Chinese companies tend to go abroad for multiple kind of reasons. So there are reasons to go abroad for, such as natural resources, market opportunities, also supply chain expansion. This is in part driven by China's own rising labor costs, but also the interest, for example, in avoiding tariffs. In this year's ranking, we ranked 80 investment destinations. And in fact, we see the rise of a lot of major emerging markets. So particularly those in Southeast Asia and South Asia, but also in Latin America, in Africa, and the Middle East. And in fact, if we're going back a little bit earlier in terms of what we're saying about FDI flows, Chinese outbound investment was a key reason why we see ASEAN countries accounting for a larger share of FDI inflows globally. Finally, I want to highlight the fact that risk tolerance of Chinese investors, indeed, as Tom, you were saying earlier, has declined. Chinese companies now seek to avoid countries with high-level operational and financial risks, and also those who are sanctioned. So those with rather cooling political relations with China, many countries are, in fact, in the West for those cases. Chinese investors are also increasingly avoiding them as well. So we took a deep dive into many of these economies, like India and Mexico, in terms of Chinese investment interest. Do take a look at the report if you're interested in global investment flows.
Great, thanks, Chim. So a recommendation to look at that report. Also, more broadly, keep an eye on Viewpoint, where you'll see our analysis on China and globally regularly updated. So thanks, Chim, for sharing your insights today. It seems a period of change and transition, both in terms of flows into China and flows out of China as well. And please stay tuned for next month's EIU Global Outlook video. Thank you.